Hey guys, happy Friday and happy 4th of July. Happy Independence Day to each one of you. In this video, one more bit of coverage on the July 2025 AMC debt restructuring, something that I promised over the past couple days that I would follow up with you guys in a separate video because this is a difficult topic for some people to hear. And, I don't like presenting this information, but I do think that it is important if you're in the trade as an investment or a speculative trade that you understand the documents. There is a narrative going around already this week that, in my opinion, is incorrect based on black and white reading of the documents. So I'm going to put the main document link in the video description. I encourage you to read through it yourself if you haven't already. In fact, check every single thing that I talk about in this video. I'm not sharing opinions today. I'm sharing black and white legalese from the document in a way that is simple for you to understand and go do your own research. Please do not take bullet points from anybody on social media without reading the document yourself or hiring competent financial advisors licensed to help you understand the documents. So what is the topic then that we're talking about in today's video? Interest rates and consent fees. What it is going to cost AMC to get this legal lawsuit to go away. You guys know I've been saying since November that there were two key things that I had on my short-term risk list that I was watching for and waiting to get resolution on, and one is getting the lawsuit behind them. So this is a major step, AMC putting this legal risk behind them by coming up with a debt restructuring and a payout agreement to the lenders. Everybody signs the dotted line, and that is now in the past. But we still have to understand the ramifications of what that cost. Settlements aren't free. The settlement cost something. So we're going to talk about that today. And the other thing we need to talk about is just social media takes on this, where they are quick to give an opinion without really understanding the document. And I don't think that most people are doing that maliciously. I think that some of them have, the desire to look at everything through rose-colored glasses, and they don't want to dig very deep because they're afraid of what they might find. And those very people are not going to like my video. They're going to tell you I'm giving you a slanted bias or some negative way of thinking about this. I try to approach these things from the point of zero bias other than just understanding legally and financially what does the document say. And then I present the information to you covering both the good and the bad because it is important for you to understand both to make the most intelligent decisions if you care about the finances and the fundamentals. Some of you don't. Some of you just want to hear about naked shorts and you don't care about anything else. And this is not the channel for you. But for those who do want a balanced viewpoint of what is going on and how it might be impactful to you over the next 6 months, let's get into the actual document. Before we get into the details of this document, let me just start off with the good stuff. I think that given the current situation, AMC's current liquidity situation and where their existing bonds are trading out in the market, that this legal settlement, the debt restructuring, is probably the best that the management could come up with under today's circumstances. Now, I do certainly hope that in a year or two, things improve with the box office, liquidity, and EBITDA and cash flow, and that the company can work a new debt restructuring with more favorable terms. But I don't want to get this video twisted. I'm not throwing stones at AMC. It just is what it is. And for example, if we look at the 2029 bonds that are out there right now, they're trading at a steep discount to par, 77 to 80 cents on the dollar, indicating that the market sees a high credit risk with AMC. And the effective yield on those bonds, as you can see on the screenshot here, has been between 15 and 16%. Even though these are 7.5% bonds, when you factor in the discount, and the credit risk that the market is applying to these bonds, the effective yield that market participants are getting on the bonds right now is 15 to 16%. And that is definitely something that they're going to bring to the table as a negotiating point from their side before they're willing to hear anything that AMC has to say. I set that as a stage so that you can understand how AMC was trapped going into these negotiations. The first thing that I want to get out of the way regarding this week's documentation is the prospect of a shareholder vote requesting more shares in December of 2025. You can search the document yourself for the word shareholder approval, and there's 22 different instances where it comes up. We don't need to go through all of them. I've got one highlighted here on the screen that says, if by December 10th, 2025, AMC has not obtained the necessary shareholder approval, yada, yada, yada. These are the, what I call the contingencies, or the if this, then that. If there's not a vote, and if shareholders don't approve it, there's going to be, in both cases, some serious financial penalties to the company for not getting a vote done or not getting shareholder approval. So in my mind, there will absolutely be a vote. What the outcome of that vote is in December, I can't tell you. We'll have to all find out together. But for anybody who is trying to spin right now, telling you that if any of us are talking about an upcoming vote to request more shares, if they're telling you that just simply talking about it, reading a document from the company makes you part of a cabal, I would ask you, why aren't these people able to read English? And if they can read English, why are they not willing to have an honest discussion with you about what it clearly says in black and white in the filing from AMC? This is not a debatable point. So no, it's not FUD. It is just facts. Facts that you dislike. If that's how you define FUD, maybe it is FUD, facts you dislike. But it is factual that there will be a vote, and if there is not one, there are going to be severe penalties for AMC in terms of penalty interest rates, for example, things we're going to get into in just a second. In my prior video, I went over how I think the debt restructuring is going to look, and you can see from the totals at the bottom, the before and after columns here in the middle, 4.085 roughly of debt going to be reduced through this restructuring to 4.045 billion. There were some people who got some errors in this analysis. I think they were counting the 2025 debt in their reduction, but the 2025 debt was already paid off several weeks ago, so we don't want to count that. And the other thing is, I don't think that the 2026 subordinated debt up here, 41 million, is going to be paid off with the 223 million of extra liquidity that AMC is bringing in. So I am not subtracting that from the balance of the debt restructuring, the reduction in the debt. It'll be paid off most likely next year when that debt comes due. Maybe they pay it off now. That's cool if they do. That would drop it from 4.085 billion to 4 billion. But it is not incorrect if someone says that the balance of AMC's debt is going down. The debt balance is going down at the expense of trading debt for equity. Keep in mind, per the second bullet point that I have listed under the table here, that in my analysis, my guess about how AMC is going to take this $223 million is that they will pay off part of the 2026 debt, 131 million of it, and then keep 92 million of it as cash extra liquidity. These are small points that in the greater scheme of things don't really matter, and we'll know the actual answers when we get the next 10Q. The next thing that I want to talk to you about in this video is the change in interest rates that are going to be coming our way thanks to this new debt restructuring. And I went and looked at AMC's press release and carefully read through it. There's no mention in here in these bullet points about a reduction in interest rates. I also went and looked at Adam Aron's tweet. Again, no reduction in interest rates mentioned in the tweet, although some of you have been asking me this week, Tony, what are you saying that you're not happy about? Because Adam told us the rates are going down. I don't see it. If you guys know where they talk about the reduction in interest rates from the company, let me know. I have seen a lot of people on social media, both X, YouTube, Reddit, StockTwits, talking about lower rates, but that is not factual in my search. I have not been able to find the company trumpeting that as a talking point of the legal settlement debt restructuring this week. It is funny though how people create their own narrative and then that narrative spreads like wildfire. So when we consider the old debt and the new deal, the new debt this week and the new terms, what actually changed? Let's look at a new slide I prepared for you guys just to go over interest rate changes. The first interest rate change that we're going to talk about is the $950 million of 2029 notes with a 7.5% interest rate. In the agreement, we have $590 million of that money coming back in, and they will be exchanged for new notes in the amount of $825 million. So we'll have a little bit of the pre-existing $950 million at 7.5%, and we'll have the new $825 million 2029 notes at a new interest rate. On that new $825 million money, the rate is going up considerably. It's going up to an effective rate of 15%. That would be defined as 9% cash interest, which is 1.5% more than what AMC was paying previous to this week, plus now an additional 6% payment in kind. And then I mentioned to you guys the vote, the importance of the vote coming up in December. If AMC shareholders approve the request for more shares, then that rate will stay locked in at 15%. If the vote is not approved by the shareholders to authorize more shares, there is a penalty to AMC of an additional 2%, and the effective interest rate will go up to 17% on this $825 million. That would be 9% cash plus 8% payment in kind. If that 15% sounds really, really high to you guys, now you can reflect back to the screenshot I showed you at the beginning of this video talking about the 7.5% 2029 bonds that are actively trading out there in the market right now with an effective rate of 15%. And it starts to make sense why the bondholders negotiated this change in rate. If they were to give AMC a restructuring and some extra cash, we want the same 15%. And so here we go, 9% cash and 6% PIK. Looking at the 2030 debt, it was these exchangeable notes. They were previously cash interest at 6%. It's what's called a PIK toggle. So AMC can choose to pay 6% cash or 8% payment in kind, which spares them cash. Under the new terms announced this week, it's going to be 6% cash plus 2% payment in kind. So now it's 8% effective rate. There's not a choice between 6% and 8%. It is 8%. And going to the last two columns, if the shareholder vote is approved in December, that rate is going to drop all the way down to 1.5%. That's pretty cool. And if that shareholder vote is not approved in December, then the rate on the 2030 bonds is going to skyrocket to 13%, being 9.5% cash and 3.5% payment in kind. What does all this mean? It means that it is important that everybody understand how the interest rates are changing now and what could potentially change for the better or worse in December when that vote happens. So again, I will apologize for being the one to have to convey this information to you guys, but it is important for everybody to start talking about it, wrap your heads around it, and understand what is changing and what is ahead of you in the next several months when that vote happens. In terms of where to verify all of this information for yourselves, which I encourage each and every one of you to do, as well as holding people accountable who are talking about interest rates, go to the document linked in the video description, scroll down to Annex A and B at the bottom, and look at the parts of the tables that is called interest rates. And I'm just going to point them out to you here. You can see here that the interest rate is variable depending on AMC's total leverage ratio, which is right now greater than 7.5x, meaning that the effective interest rate comes out to 15% total interest comprised of 9% cash and 6% payment in kind. The 2030 debt deal with the exchangeable notes, it says here interest rate 6% cash and 2% PIK, dropping to 1.5% if the shareholder approval is required before December 10th. And if it is not approved, it will increase to 9.5% cash and 3.5% PIK, or 13%. Please go read the documents yourself before you complain about my video. The other kind of nitpicky thing worth pointing out regarding these interest rates, and I have it highlighted in orange here, is that the interest rate on this new 2029 deal will accrue from April 15th, 2025. So we will need to go in and make some adjustments to our forecast. I think, I'm not a CPA, but I think there's going to be adjustments made on Q3 for the backwards dating, the accrual of the new interest rate for this loan. What I want to say about the payment in kind right now is I think there are still some loan documents that we haven't seen yet. And this is cash and PIK, not cash or PIK. My presumption is that the payment in kind is going to be an amount that is added to the total debt at maturity. So they'll be paying 9% cash interest, and 6% is the amount that the debt is going to grow on an annual basis, and that amount is going to be added every single quarter to the total debt. So not only do we have a higher interest rate, but the amount borrowed is going to increase, not go down, based on the payment in kind being tacked on to the principal. The final talking point in this video to address things which nobody's really talked about in this week's debt deal is the consent fees, or the sweeteners as I call them, to get everybody, the bondholders, the term note holders, to get on board with this program. For the term loan holders, there is a consent fee that basically works out to $23 million. I'll let you guys go do the math on that. I'll show you where to find it. And on the exchangeable notes due 2030, there is a consent fee which is going to equate to $15 million, which will be handled after December, after the vote, depending on how the vote goes. If the vote is approved, they will get $15 million extra in shares. And if the vote is not approved, they'll get $15 million in exchangeable notes. Why do I bring these up now? Because they might affect how we calculate one-time expenses in the next quarter or two. And they are things that you need to be aware of that could affect the income statement and earnings per share in the next couple quarters. I know this is a lot of information. I hope you watch the video 2 or 3 times until it sinks in. And if you're a CPA or a finance professional that is actively working in the trade and you find anything incorrect in my video, let me know. I am reading straight from the documents, but if I got something wrong, I want to hear about it from you in the comments. I'm not going to entertain any speculation about motivations or this or that. We're talking about today what is in the document. It's a very simple conversation. Things are in black and white. There aren't multiple ways to interpret this unless you're creating an alternative reality, an alternative narrative. And I am not here to do that. I'm here to read the documents, use them to drive my trading decisions, and then share my due diligence with you guys. Again, if I got something wrong and you can prove it to me in the document, please do so. I'm happy to have a conversation with any of you. And if you want to have a live stream with professionals going over these documents and have some debate or discussion about it, I'm happy to arrange that as well. I am Tony Denaro. Thank you guys for watching. Enjoy the rest of your holiday weekend, and I will see you on the next video.